Hey guys, Mike here. So do me a big favor before we can get started. Thumbs up in the comments if I'm not blurry, because I keep getting that in the comments and I keep trying to fix it. On my end, everything looks good, but please let me know. Okay, thank you very much for doing that. This video will be a little bit different now. We're gonna go over the market stuff at the beginning, where I'm gonna give you a few charts and some data and stuff. But then what I'm gonna do is ask you 3 questions. I'm asking 3 questions to try to get us trying to figure some stuff out here. I want to get your input. Some of you guys are really good at economics. You're really good at a lot of different stuff. So again, starts a conversation and we get real-time information. Okay, that's really the key to this, right? Instead of something that's 3 months old. And so I'm going to ask those 3 questions. That way I'm putting the market information forward, because those who don't want to participate or don't care anything about that kind of stuff can just go ahead and get off the channel as soon as that ends, okay, or get off this video. Okay, so just being upfront about that. Now, starting with the market stuff, the only thing I'm going to say about the Qs is simple. Up over 1% today, but I just did a whole members video on this, so please, I implore you to sit there, go through your charts, your stocks, look how far above the 50-day moving average this index still is. And that is just nuts. Hadn't even sniffed the 50-day moving average since March after it bounced off of it. 200, forget about it. I mean, still 22% above it. But that's important, and put in the comments if you know why that is important, that's happening. And I implore you to go back and look at the historical patterns of the Qs and any other index you want to, especially coming out of any kind of crash. Now, what helped it? Amazon. Look at that huge candle, right? And what do you need when your stock is stagnant like it has been over the last few weeks? What do you need to come out? AI, baby. AI. Amazon Web Services invests $100 million in generative AI Innovation Center. And suppose this new center will connect AWS AI and machine learning experts with clients around the world, right? To help be more innovative and all that fun stuff. So that's all you need to do that. Now, of course, it does have a very good chance to continue this move up because you can see that volume shelf right there. It's basically bouncing right off that volume shelf. There's not a lot of resistance there to move up into the 134, 136 range. Just keep that in mind as the AI hype train continues. Now, Tesla, I'll show you what happened today, because this tends to happen. At first, you were like, uh-oh, went down to 250s, got bought up like crazy. If you look over to the left, been bought up at this level quite a few times. But again, somebody tried to rug pull it again. But dip buyers came in strong. If it can continue, it needs to get above 268 really to let this game, continue. It doesn't need to close below like 260, 261. That would not be good at all for it if it actually does close below that. But again, look at the 268 level to keep the party going. But you can see, again, if it can keep going up, because it's dropped and gone up so fast, there's not a whole lot of resistance there for it. And basically, if you look at what happened here was, Morgan Stanley came out right after their downgrade yesterday and said, we're going to downgrade them too, right? Same thing as other folks did yesterday. They raised their price target as they actually downgrade them. I always love how that happens, right? Now, AMD, what we talk about, the 110 level, which got bought up today multiple times, which I'll show you that. And the good thing is it's almost completely filled that last gap right there. And so, again, down 18% in a very quick amount of time as the AI hype around this one just died out. This one, unlike the other ones, like NVIDIA, actually does respect the moving averages. You can see it's bounced off the 50, the 150, almost the 2 actually. This year, it's about, again, way above its 200-day moving average. But look what it's coming and approaching, the 50-day moving average again. And so I'm looking at that trend line right there. But again, let's see if the 110 holds. That's really the key level to watch out. And you can see right here what I was talking about. I didn't make the level up or nothing. But, dip buyers came in, started buying it, algo started getting triggered, and kept trying to push up and push up. So we'll see. Again, it almost closed the gap to the penny. As far as the Russell, I don't have to show you the Russell. All I have to do is show you, remember, regional banks. Regional banks are red. You forget about the Russell, right? SPY was green, Q's green, IWM, not so much. And because the banks are struggling, because there's probably going to be more rate hikes, which I'll show you in just a minute. And guys, before we continue, if you're getting anything out of this, please hit that thumbs up down there. I really appreciate it. And if you like the material here and the videos, think about subscribing. And that leads me into my 3 questions. For those who want to participate and for those who don't, you can log off now. And so I want you to put this in the comments, what you think. Doesn't have to be a book or anything, but some of you guys are really good at this. 1, we talked about this, and I like to think ahead, that's why I'm asking these questions. We're in a multiple expansion, right, where the prices of the stocks are going up, right? So PDEs, they're going through the roof right now on a lot of stocks, right? Even the indexes are really high when you look at the environment we're in. Now, my question is, because most of these companies are global, right? Like Apple, half its revenues come from outside the U.S., NVIDIA, all the rest of them. Tesla gets a boatload outside the U.S. So the question is, where is the growth going to come from? And I'm asking that honestly because I'm just looking at the environment, right? I'm looking at Canada still raising rates. Bank of England did what today? They raised 50 basis points. Shocked everybody on that one. Other countries today raise again. Australia still raising. China actually holding out on big stimulus plans. We'll see if they, do it. They cut barely some interest rates, but we'll see if they come out with a stimulus. But when you're looking at it, because the earnings expectations are going up now, right, versus before, I don't have my stick here, but I used to have a stick I'd drop on the floor for those who are new and say when earnings expectations on the ground, on the floor beneath it, all you got to just trip over it. Well, now earning expectations are going up because as you do multiple expansion, what do the companies have to do? Their earnings have to start increasing to grow into those multiples, right? And so they'll kind of meet somewhere in the middle, whatever. And so my question is, where's the growth coming from? Because yes, is liquidity going to start coming out of the market? Absolutely, especially on a global scale. Not just here. We think the states look great, and we do. Still going strong, right? But it matters what everybody else is doing too. And so I'm just curious because I don't live in Canada, I don't live in Europe, I don't live in China or Australia. Maybe those countries are kicking butt, taking names, doing great, and all that stuff, and they're going to be able to keep buying iPhones and Teslas and everything else underneath the sun, right? And go and continue to vacation. I don't know. I know it's what we're doing in America, but globally, right? You have to have growth on a global scale. This is a global economy. And so that's my question. Where is it coming from, right? Especially if rates continue to go up and then more importantly, just hold at levels we haven't seen. Some people, well, I'll get in that in just a minute. But anyway, that's what I want to know. Put in the comments what you think. I'm curious to see it because I rack my brain trying to figure out where the growth can come from. And I know the quickest answer somebody's going to say is AI. Oh, AI. Like we never had AI before. I'm like, dude, financial institutions have been using artificial intelligence for like 15 years now. All right, Apple, all these other companies have been buying these crazy chips. I know the chips are better, but they've been buying these kind of chips forever trying to monetize AI, okay? And so, yes, will that come? Is it going to come in the next 2 quarters? No. Like it's not even 3 quarters, probably not. But so that's what I'm curious about, the growth part, okay, since we are in a multiple expansion phase here. The other one is, question number 2. You hear a lot about savings rate. And what do I mean by that? Let me just show it to you before I even ask the question. You see right here, we had all these trillions of dollars extra savings from all the checks and everything. Everybody was cashing in. And when you look at this, you're sitting there thinking, well, where is it going? And according to this, and this is a very busy chart here, but I'll just read out the top. Household accumulated excess savings likely going by October 2023. That's what JP Morgan thinks. When again, that's 3 months away, right around the corner. When it comes to the accumulated excess savings, obviously, seems like those are falling off a cliff and going to the wayside. And let us know in the comments if you see that happening. That's what's happening in your part of the world or in your family, right? Do you see your savings account dwindling down or what? And the question is, here's the question I have, is it really dwindling down or are we just moving excess savings from one account to the other, right? And what I mean by that, if I buy my neighbor's car, washing machine, grill, whatever it is, and I take money out of my savings account and I give it to them, and I take the grill, the washing machine, the car, whatever it is, well, what just happened? Right? My savings account went down, their savings account went up by the same amount, right? If I buy a house, right, so I take money out of my excess savings, put a down payment down, people have told me it's like 5% now, and somebody sells me the house, right? So what happens to those people, right? The ones that own the house, now they get money, right? The person that sold the house now gets a very big, fat commission check, right? If I go to a business and I'm spending money, whatever it may be, booking travel or buying something in a store, whatever it is, well, now money comes out of my savings account and just goes into that company's account. What are they doing? People still getting bonus, raises, commissions, they're still getting hired, all this stuff, right? And then maybe they take the money and they reinvest in something else, which means they buy equipment, and now the money goes from their account to another account. So that's really the question I have, because remember, they project this stuff to be gone last year. And it hadn't happened, right? So to me, it's like, unless you physically take it out, and I'm simplifying it, I know. I'll get killed in the comments for this one. But unless I literally take the money out of the savings account and go out to that fire pit that you can't see and burn it, it's not going anywhere, right? It's just moving from one place to the other, right? And so, let me know. And that's what I want to know. Like, are you guys cutting back on spending because your savings is being depleted or what? That's what I want to know. And I'm just curious about that because everybody I know seems to be pretty happy with their savings and stuff. So I just Just curious about that. And of course, it was, I mean, we had a lot of savings, right? I mean, trillions and trillions of dollars worth. Now, so let me know in the comments on that one. 3 and last one. Can the Fed actually slow a services-based economy down like they said? And I told you yesterday I was going to find this out, and thank you for the answers in the comments. Some of you guys said, I think it started with Clinton when we started shifting from manufacturing to a service-based economy. Some people said after the dot-com. Well, let me tell you something. When I did my research, believe it or not, it actually happened in the late 60s, early 70s when we started it, and it ramped up in the 80s, okay? And I'll show you right here what I'm talking about. And this basically goes over employment, which is what I wanted to know, right? Who was going to work where? And when you look, you can see right here, this chart, which I apologize, it is blurry, it's not your phone or whatever, but look at the lines. The blue line is all employees that are employed in the services sector. The red line is employees, I hope that's red, that are employed in manufacturing. You can see 1969, you see how it starts to divert. Manufacturing starts to flatten, lay off. What was going on in the 70s, by the way? High inflation, and we went to high rates. Look at what services did, though. During this high inflation, high interest rate environment, it just skyrocketed up, right? And then you can see going in the 80s, 90s, and especially going towards the dot-com bubble, manufacturing jobs just fell off a cliff, right? Because what happened? We shipped them to China. That's what happened. But look at the services-based stuff right here. And you can see today with the numbers we put out. I mean, in fairness, is initial jobless claims going up? Yeah, like they kind of plateaued off right here. But they've been going up the last few. And then if you look at what's been going on really since October of 2022, right? Initial claims are up. That's what I wanted to know about the services stuff. And I wanted to see that. And you saw in the 70s when they did the Volcker moment, raised rates to 20%, did all this stuff. What did employment do in the service sector? It skyrocketed. What happened to manufacturing? Imploded and started trading sideways and going down. What are you seeing now? Manufacturing, all the data is just hot garbage, right? Coming out of there, but that's 30% of the economy. What's going on with services? They can't, and even Jerome Powell said this, they can't slow it down. They thought they would have by now. And the question is, can you? But this is the only other time I know of in my lifetime we've had crazy inflation, right? And people are tied too much to the inflation part. Forget about the inflation. What they're trying to do is get these supply and demand issues out. Understand, we cannot have a housing market like this. It doesn't work unless you want a nation of renters, which they would love to do, it seems like. That's what they're turning into. I'll show you a chart on that one coming up here, because if you look at what's going on multi-home family stuff, which is the apartment buildings, they're growing up. We hadn't seen levels this high since like the 70s or something. And so I'm telling you, they're popping up all over the place right now. All right, and what's happening is if you try to rent, I was in that business before, what do they want to do every year? Raise the rents, all right? And you get no tax benefits. You're building absolutely no wealth by doing that, okay? Because you have no, you can't sell it. You're renting it, right? And so that's a huge problem. You do not want a nation of renters, right? And people, especially in Florida, good luck buying a home. I mean, maybe you can get one, but it ain't going to be cheap. Let me tell you that right now. And it's going to continue to go up, by the way. Just FYI, especially in this state. Now, certain states may be hurting, but that's one thing. You got a supply and demand issue, and they're building them pretty fast. I'll show you a chart on that too. And they're trying to get it, but the supply is garbage. I've showed it to you. It's so far down. I mean, it's crazy levels, and you can't have that, right? Other thing is, what you got going on here in the workforce? Still got that supply and demand issue where you got way more jobs than people. I still see wanted signs out there. You guys are telling me the same thing. People in the memberships telling me the same thing. They're still seeing that go on. Energy, can't fix that because oil and stuff, oil companies, all these energy companies, they control that. They call them, you know, a cartel for a reason. I don't think that can be fixed no matter what you try to do. But the other ones have to get fixed. Like, you have to get it back in a somewhat balance, okay? And so that's what they're trying to do. The question is, can they really do it? You know, and so just want to pose those 3 questions out there because I'm looking down the road. I like to think ahead. I don't like to just be thinking 24 hours and 72 hours out or whatever. But, you know, that's the question. And my answer simply is not the pace they're going. I mean, maybe it'll happen maybe it's going to take a long, long time or something, right? I mean, some crazy event, credit crunch, but they're bending over backwards with liquidity, which is the problem. You know, so maybe if you get some huge liquidity crunch that happens, but so far they've been over backwards to make sure that don't happen. And so, you know, I really want to hear what your comments, what your answers are. I always value your opinions and stuff. So a little different video today, but I was thinking about it. I was driving around. I said, you know what? I think maybe we need to get some answers and get some real-time knowledge here, okay? So let me know what your answers are. I really appreciate it. I'll share them in the next video if you like as well. I think that'll be good. So, hope you got something out of it, guys. Tomorrow's Friday and everything. We'll see where the market kind of goes from here. And again, pull up those moving averages on your charts, guys. See where your stocks are at, okay? Because like I told the members, you can really use moving averages getting in and out of stocks, okay? Just FYI. So please hit that like and subscribe button. I really appreciate you guys and everything. And so I'll see you tomorrow or Saturday, one of the two. All right? Have a good one.